I don't believe the BRICS feel as though they're in any urgency to get their various options out there and to get their channels fully ramped up, because they see a treasury bond default, because they see a government debt. The United States, it's gone out of control. So there's going to be a lot of gold demand. And as you get the gold demand for higher prices, it's going to create fever. And I think the Eastern nations know that we're going over 3,000 for gold, a lot better than the Western nations do. Therefore, they're going to continue with their gold load, increasing their gold reserves, make available usage of the gold token.
The last 2 months have witnessed a significant surge in gold prices, largely attributed to central bank buying. Notably, central banks from China and Russia have been consistently purchasing gold since 2010, a trend that has continued into 2023. Moreover, recent reports from the World Gold Council in March revealed that other countries, such as India and Turkey, have bolstered their gold reserves, with Turkey adding 12 tons and China adding 10 tons in 2023 alone. Central banks' consistent accumulation of gold, particularly from the BRICS nations, Brazil, Russia, India, China, and South Africa, raises questions about the potential for a gold-backed trade currency among these countries. Analysts speculate that the steady gold buying may be in preparation for implementing such a currency, as gold acquired by central banks tends to remain in reserve for extended periods. However, there appears to be a perceived lack of urgency among emerging economies, including the BRICS nations, to establish alternative payment systems. Despite advancements in blockchain and cryptocurrency technologies, these countries are purportedly cautious, possibly due to concerns about a looming financial crisis. Analysts like Willie warn of a potential default on U.S. Treasury bonds and escalating government debt in the United States, prompting these nations to focus on bolstering their gold reserves. Willie argues that central banks are preparing for the possibility of a financial crisis by accumulating gold reserves. He suggests that this strategy will significantly increase the price of gold, benefiting those who have invested in the precious metal. Despite concerns about increased gold production leading to a decline in value, Willie dismisses this notion, likening gold to other commodities that maintain their value despite abundant supply. We will present clips from Willie's interview with Arcadia Economics. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
I like to keep things simple as possible for maintaining sanity, and when there's just too much on the plate. I'll be honest with you, I'm trying to learn what ENDGAME is. I believe it's some form of payment system involving gold. Okay, here's my simplistic perception. The BRICS are in absolutely no hurry to install other non-dollar options. They're in no hurry at all. They can rely on the Chinese yuan because China said on a temporary basis you can do that. In Eastern Europe, they're using more and more ruble for settlement. With India, Russia has a problem. India wants to use the rupee. Russia's saying, we'd rather you not pay us in rupee. And Russia would prefer the Gulf region types like the dirham out of UAE, United Arab Emirates. India is pushing back on that. We have now the blockchain that is being built out as a platform. That opens the door to XRP. Its on-demand liquidity makes it a great candidate. I don't believe the BRICS feel as though they're in any urgency to get their various options out there and to get their channels fully ramped up, because they see a treasury bond default, because they see a government debt for the United States, it's gone out of control. So there's going to be a lot of gold demand. And as you get the gold demand for higher prices, it's going to create fever. And I think the Eastern nations know that we're going over 3,000 for gold, a lot better than the Western nations do. Therefore, they're going to continue with their gold load, increasing their gold reserves, to make available usage of the gold token. The gold token requires the parties to have adequate gold reserves behind the token. You can't just say, well, we're going to use the gold token. Well, do you have the gold behind the token? That's what they're doing now. It's going to be Russia, China, Persia, and Saudi providing the gold. And China will be more the dynasties than it will be the government. The government is, I tell you, the government, they're coming out with all this information about the People's Bank of China and all their increases in gold. Oh my gosh, they're buying probably 10 times that off the book. They're setting the stage for the Rothschild central banks to load up on gold quietly and secretly. And then once we get near 3,000, they're going to push it to 3,000 flat, 5,000 then in the following, who knows, several weeks. And in the following months, 10,000. And miraculously, the Rothschild central banks will work their way out of insolvency. And to do that, they need a lot of gold. You don't just buy, 20 tons of gold and, oh my gosh, we're out of insolvency because the price went up fourfold. That's nonsense. They got to buy a lot of gold and they will not be selling it. Those people who think, my gosh, there's so much gold out there, it's going to go down in price. I say there are a lot of televisions out there and they're not for sale and the price is not going down. There are a lot of shoes out there. They're not for sale. The price of shoes is not going down. It's one of the dumbest arguments I've ever heard from smart people.
The current economic climate in the United States reveals troubling signs of an inflationary depression, where economic indicators diverge significantly from official reports. Despite claims of moderate inflation hovering around 3 to 5%, the reality paints a much bleaker picture, with many categories of price inflation registering rates double the reported figures. In the past several weeks, government data has shown that inflation remains stubbornly above the Fed's 2% target, and that the economy is still growing robustly. Year-over-year inflation rose to 3.5% in March, from 3.2% in February. With inflation rising, the Fed sees the need to raise interest rates to curb spending and stabilize prices. However, such a move risks stifling economic growth and exacerbating the depression. Conversely, lowering interest rates could stimulate economic activity, but may fuel inflation further, worsening the situation. Adding to the complexity are the challenges large insolvent and central banks face. Jim asserts that depleted inventories and staggering losses on treasury bonds, amounting to nearly $1 trillion, leave these institutions in a precarious position. He sees that their inability to short the gold market further limits their options, prompting a shift towards gold as a safe haven asset amidst the economic turbulence. Let's get back to the interview.
The inflationary depression in the United States is becoming more and more evident. Falsified economic statistics. We've got now like 5 or 6 categories for price inflation, and they're all double the official aggregate stated price inflation. They're saying it's 3, 4, 5%. We've got numerous items that are 8, 10%. Okay, not believed. Inflationary depression, there's no way out. Can't raise rates, can't cut rates, just like I said before. The big insolvent banks are in the same position as the central banks. They've gotten rid of the GLD, the inventory, so they cannot short the gold market anymore. They got almost $1 trillion in unrealized losses for bonds. They never say that those assets are treasury bonds. They can't sell them, Chris, because from convexity, it would force a snowball effect and a bond default. The big banks are loading up in gold. I did a consult call with a fund manager a few months ago. He said, Jim, every Wall Street bank has gold and they're doubling their gold. Every Wall Street bank has gold and they're doubling their gold. The depression means they need to cut rates. The inflation means they need to raise rates. You cannot sell a bond with rates going down when inflation is going up. You can't do it. They don't show up. And we're handing money under the table, Chris, to England, to Belgium, and to Ireland. We're handing money under the table for them to show up and buy our bonds. And it's not showing up on the tick report because they're giving it right back under the table and it's going to the Fed balance sheet. Before I get to my list, I'm going to talk to you briefly about what I call foreigners are selling treasury bonds at a record rate. We've got a tremendous amount of supply of bonds. The Department of Treasury is obligated to buy back the bonds. And the Fed is where they put the bonds. So how's the Fed reducing their balance sheet? They're not. They're lying. Or we're tapping the Exchange Stabilization Fund. And let's just leave that for a future date to discuss. Foreigners are selling a huge amount of treasuries. The government's got to buy it, the Treasury Department. They put it on the Fed balance sheet. We got a tremendous amount of bond supply to sell. They're unsuccessful auctions, which means we put a lot on the balance sheet after monetizing them. So how's the Fed reducing their balance sheet?
The recent surge in gold prices, driven by central bank acquisitions and discussions surrounding a potential gold-backed trade currency among BRICS nations, underscores a notable transformation in the global economic sphere. This trend reflects growing concerns amid signs of an inflationary depression in the United States, where official reports diverge from actual economic indicators. Having said that, the importance of gold as a safe haven asset becomes more evident, offering protection against potential financial instability. How do you see gold's role in securing financial stability amid economic uncertainty? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.